Okay, so good morning then. Welcome to the autumn. Good riddance to the summer. What a slow August. I mean, wow, that was slow, and fortunately it's behind us. Let me just bring up. Let me just put a volume analysis onto this S&P monthly chart. One sec. And you'll actually, wow, that's not as low as I was expecting, to be quite frank. Actually, we had a higher volume. Is that right? We had a higher volume apparently in August than we did in July. It didn't feel like that, but okay, I'm surprised at that volume chart. That doesn't really tell the story I would suggest. If you're looking at a daily chart on the S&P, you know, we had something like 35 consecutive days of an intraday range of less than 1%. T-note yields. Let's have a look at the T-notes chart on a daily basis. US 10-year government bond yields were trapped in a 10 basis point range for the whole month, 1.5% to 1.6%. We did not at any point get outside of that range. Extraordinarily slow. So thankfully it's not August anymore. 1st of October, no it's not, 1st of September. And let's have a quick look at how markets performed now that that month is finished. Here's a few stats on different asset price performance. This is like done by Deutsche Bank do this. Deutsche Bank early morning read produce this at the beginning of each month. They look back. So this is looking at August and how assets have behaved. And you know, you can pretty much, it's quite interesting. Obviously the commodity space dominates the losing right hand side of this chart. Wheat being the standout worst performer, as well as then corn not far behind. Then interestingly silver in the mix here, but as you'll see on a chart in a minute when I show you year-to-date returns, silver just giving back a little bit of their stellar profits in the month of August. We then got copper and then gold in here as well. Gold's had a pullback over the last few weeks, so certainly commodities dominating on the right hand side, but flip across to the left and look who's in position 2 and 3. It's WTI crude and it's Brent crude, and actually if it wasn't for the big sell-off yesterday that I'll talk about in a minute, these two would have been numbers 1 and 2. So we almost had the scenario where we had commodity markets on the left hand and right hand side of this chart, which I can't remember that ever happening. But of course with the oil situation, it's kind of been doing its own thing. As we know, we've had a bounce away from $40 off this probably deluded idea that OPEC are going to agree on some kind of output freeze this month in September. But I'll talk about oil a little bit later. What's on the best performing side here is Dow Jones Stocks 600 banks. And again, this kind of does not tell the story. This is rebounding off phenomenally big sell-offs. That's why banks are here. A little bit like silver over on the right-hand side. That doesn't tell the story either. That's just a pullback from phenomenal gains. Okay. Elsewhere, you know, generally speaking, equities ticked higher in unspectacular fashion, and a lot of this stuff is bang on flat. So in the end, really, it was just the commodity markets. Plus, yeah, really just outside of the commodity market, it was a pretty dull month. If we look at the year-on-year return, so this is year-to-date, sorry, not year-on-year. This is the year-to-date chart. You see what I mean about silver? Despite the fact that silver was one of the worst performing assets in August, it's still the best performing asset this year. Gold's still right up here as well. The Bovespa, this is the Brazilian stock market, of course. Brazil in the news yesterday. Rousseff getting impeached. So that saga, which has just helped to continue to cripple the country from an economic point of view, is done. So maybe we can move forward, or they can move forward now with a new government. But the Bovespa bouncing this year, and that doesn't quite tell the story either, because it had a shocking 2015. And on the right-hand side, wheat's the big underperformer for the year. as well as the banks, you see. So in August, the banks ramped up strongly, but of course, year to date, they're one of the worst performing assets of the lot. So a bit of a mixed bag here. So that's the look on how some of these assets have performed on the month. If we just look in at some of the charts, I just go take this S&P chart back to a 60-minute time frame, because what's happening right now, we're just trying to get up through R1 and trying to shift up through this high point we had throughout yesterday Asian and yesterday European morning session, and even into the afternoon. 2176 was a big barrier. This had been key resistance when we broke lower on the 30th of August. So the S&P trying to push higher. Look at the European equity markets at the top of my screenshot here. We've got the Eurostoxx on the left and the DAX on the right, both up on the day. Eurostoxx looking to test that high of the month, the 31st of August high set yesterday, of course, up at 3,050. It's been a story of divergence this week between Europe and the US. Actually, the S&P 500 is down 5 days out of the last 6. If I just go back to the daily chart on the S&P, even though we've had a string of negative sessions, sorry, hang on, my chart's just vanished there. Let me just bring up a new one quickly. I think I closed it by mistake. So here's a look at that S&P daily chart. So even though we've had 5 sessions down out of 6, that's not including today, we're still absolutely going nowhere. This is the thing about this index. It's just we're trading exactly the same price now on the 1st of September. We're trading at 2170. If I were just to draw a line there, we're trading 2170 back on August the 1st. So here we are, precisely 1 calendar month on, and we have gone absolutely nowhere. So August is done. September should be a big month. You know, we've got this Fed meeting looming. We've got the ECB next week. We've got a payrolls figure tomorrow that's of huge importance. We've got an EU summit. We've got a G20 summit this weekend. We've got volume back. We'll have parliaments back. The political news flow is going to ramp up. Rajoy lost the first round of his confidence vote yesterday. Italy and Renzi have a confidence vote of their own later in the year. So it should be now that we can put the summer behind us and really look ahead. What's going on this morning? I mean, why are equities lifting higher? Well, today, first day of the month, means we've got a manufacturing day. Here's the economic calendar for today's session, which is packed full of manufacturing stuff. So we've already had China deliver news overnight, and their official headline number is quite interesting. Here's the chart, because it came in, we were expecting 40.9, and it came in at 50.4, and as you can see on this chart, that actually puts it at a 3-year high. So Chinese manufacturing, the official sort of government, that means the government measuring manufacturing conditions amongst the very large, mostly state-owned manufacturing firms. The sentiment in that space has just ticked to a 3-year high. And as you can see, we've been flirting with the 50 handle here for a number of months, having spent 2 years below 50. We've been flirting with 50 for 5 months, and now it looks like we've popped up through it. 50, of course, on these PMI numbers is that very important pivot level. Anything above 50, and that implies expansionary conditions in the manufacturing sector. Anything below 50 implies contractionary conditions. So this is potentially quite important here. If I just showed you on a 5-year chart, you know, we've been right down below 50 or on 50 for such a long time. So this is the biggest reading. Actually, on this chart, it's actually not the biggest reading since 2013. Sorry, Deutsche Bank got that wrong. I'm shamelessly plagiarizing a stat from the Deutsche Bank report I read this morning, and it's incorrect. So actually, it's the best reading for 2 years. You've got to go back to 2014 to find the last time we were this high on this reading. So look, good news out of China. Now there is a second manufacturing reading from China, though. And this is privately run. It's not a government reading, and this is looking more at the small to medium-sized manufacturing businesses. And this is what we got on that one. This one actually disappointed in that we were expecting 50.4, but it came in 50. So a slight pullback from that encouraging reading we got for July, but still above 50. And look, still, it's the second best reading for 12 months at least. If we look at this for a 5-year time frame, you've got to go back to the start of 2015 to find the last time we were above 50. So, both of these numbers are encouraging, you would say. It's been a long time. The manufacturing sector in China has been out in the wilderness for a while. Maybe the very first hints of that sector, which is such an important part of the growth story in China, of course. Maybe signs that that's going to start to improve. So look, that's helped to just shape some mildly positive sentiment this morning. Just back to the economic data calendar, because we've got a whole bunch of manufacturing numbers out of Europe coming. Italy are about to announce their figures right now.
59.8, lower than expected, 51.1.
So they've just missed. We were expecting 51.1. And it's come in slightly below expectation. What's going to be more important is the German figure at 8.55. We're expecting 53.6 there. Here's the German chart. 53.6 is what we're expecting, which will kind of put us similar place to where we were in. So this bar that we've got on this chart is already the August reading. So just to make this clear, these manufacturing numbers from Europe, these are the final readings. We had a preliminary read for August manufacturing PMI a couple of weeks ago that came in at 53.6. We're expecting Germany to announce that their figure is unchanged, all right? So this would mean that we stay up around, it's been a decent 3 months for manufacturing in Germany, you would say. For me, perhaps the most interesting and perhaps the most important number of the morning may well be this UK figure. Now, when we got the preliminary reading for this, it came in at 48.9. Let me show you the UK manufacturing PMI chart. Actually, sorry, we don't get a preliminary for the UK. So this is the first reading for August. Check out what happened in July. Now, of course, the important thing about July is it's the first full month following the Brexit vote. And the manufacturing PMI collapsed to the lowest reading in 3 years. So you got to go back to 2013 to find the last time the UK manufacturing PMI was down here. And really, we've pretty much gone 3 years with it being above 50. We want to see whether this is going to be an ongoing situation or not. What are conditions like in August? Never mind July. And financial markets are implying that ultimately the Brexit risk has calmed. We had some really good retail sales figures from the UK a couple of weeks back. We want to see today that actually also the manufacturing sector now has bounced and is being resilient to the Brexit risk. So we're expecting the number to edge back up to 49, which is fine, but still, of course, remains below 50. Any number above 50 would be notable. Okay, so that's the data for the morning. Into the afternoon, plenty going on. Jobless claims at 1:30. Non-farm productivity for quarter 2. Much more importantly, though, the manufacturing numbers, with the ISM manufacturing PMI number at 3 o'clock being the big number of the whole day. We're expecting that to jump to 54.5, okay, from last month's 52.6. That's the big one today at 3 p.m. We've got a couple of speakers on the central bank front, Nowotny from the ECB and Mester, but check out the timing of that. They're both after the European close. And a bit of action on the bond auction front. Spain and France being very busy. Talking about that, before I just flick back and finish on the charts, just talking about corporate, bonds. This is obviously government bond auctions we got here on the calendar. But just thinking about Fed rate hike expectations for September. What we've seen, and let me just actually check out, let's say, the dollar here. If we looked at the euro dollar, which has been heading lower all morning, by the way. And so this has perhaps been one of the markets on the move. And if I just flick to some of these other currency markets, let me just put the yen on here as well, at bottom left. This is a daily chart, so we know we've had yen weakness over the last few sessions. But what's going on this morning is definitely some euro weakness. We certainly had euro on the back foot. Keep an eye out for 111.31. That's yesterday's low, which will continue this downward trending theme that we've seen over the last few weeks, or I should say over the last week or so. So it looks like this pattern's going to continue. So 111.31's key. So we've got a bit of euro weakness, really, more than anything else in the mix. I just wanted to mention, with regards to Fed rate hike expectations, they have edged marginally higher again. So as of yesterday, rate hike expectations, September's probability of a hike is now 36%. It was 34%. And December's edged up to now 60%. It was 59%. Okay, so we've got rate hike expectations very marginally going up. But Fast sent out quite an interesting FT article in the research email this morning, which was looking at, well, what's the corporate world saying about the chances of the Fed hiking rates? Because, of course, these companies that are borrowing money through the bond markets have, of course, been enjoying record ever low yields. But if the Fed start hiking, these record ever low yields are going to edge slightly higher. So actually what's happened, and here's quite an interesting chart, is we've seen a huge amount of corporate issuance in the month of August 2016. And in fact, it's the biggest ever August on record for corporate bond issuance. Now on this chart, you can see that August seems to be quite low, but August typically is an absolute dead month. All of these spikes lower in these years going back, they're all August. August, nothing happens, except for this year. We've had a really big bumper set of issuances. And this is perhaps corporate America saying, right, actually, we genuinely think the Fed are going to start hiking. So let's issue our debt now before they do and lock in these, abnormal, ridiculously low yields. So corporate America is maybe hinting there's a higher chance the Fed are going to start taking action than financial markets are. It's just something to think about. Anyway, back to the charts. And German manufacturing numbers that are about to hit the wires in about 5 minutes' time. Let me just update you because we've just had the French number, which has disappointed at 48.3. We expected 48.5. Italy disappointed, 49.8. We had expected 51.1. Switzerland disappointed, 51. We had expected... Switzerland actually beat expectation, 51 versus 50.5. But looking further down the news reel, Scandinavia's had a bit of a shocker here. Sweden, 50.7 on the PMI, we had expected 54. Norway, 50.8, we had expected 54.5. Poland actually delivered a decent number. So it's been a bit of a mixed bag, but tilted towards the downside. So maybe expecting Germany here to fail to hit the forecast. So let's see what we get from Germany. But just for now, we've certainly got slightly positive sentiment in the equity space, although that's just pulled back and calmed down a little bit now. We've got some euro weakness in the mix. I didn't mention oil yet. Let me just finish on oil, actually. This is important. Certainly the big market of the day yesterday. In fact, in the end, we sold off more than 3%. We were trading at $46 as the Department of Energy numbers hit the wires. And in the end, we fetched up down at $44.50. It was quite a clean and nice and pretty telegraphed move to $45. Below 45, I remember I was speculating, you're perhaps not going to get much action below 45. In the end, we got 50 cents more, but then we retraced to that, and we've been testing $45 all morning. We have been up to 45.08 as the high of the day, but we're just pulling back a little bit now. So certainly oil this week has had a significant step lower and trading the lowest we have for a couple of weeks now. So certainly oil on the back foot. With the dollar strengthening against the euro, perhaps that's just going to prevent... $45 is a good technical handle of resistance here. If you do expect this pattern, this downward trend to continue, then $45 or the pivot level might be interesting price points to take a look at. But certainly this was the big mover, the big market from yesterday after the higher than expected build on crude inventory. Right, I'm going to get off the mic because we've got German PMI numbers. They are due in 1 minute and 15 seconds. For me, I think the UK one might be the most interesting in the morning, and that's coming at 9:30. All right, thanks. That's it. Enjoy the day.